Welcome to my first ever breakdown video where I'll be breaking down my trades, why I take certain trades, what is my strategy, and give you guys an insight of how I trade. So a couple of weeks ago, I got funded on my funded FX, and one of the trades that I took was GBPUSD that helped me to get funded. So I'll be breaking down in this video my entry, my stop loss, my TP, and all the ins and out of this trade. So as we know, price move in waves. So if price was in an uptrend, we would add an impulse to the upside, followed by a correction, followed by a new impulse, followed by a correction, followed by a new impulse to the upside to continue the trend upwards. Same if price was in a downtrend, we would add an impulse to the downside, followed by a correction, followed by a new impulse, followed by a correction, followed by a new impulse to continue the trend. So with the strategy that I use, we will be looking to get in on the correction, on the pullback. So we can ride the wave all the way to the up, or if price was in a downtrend, we will be looking for entry on the correction so we can ride the wave all the way to the downside. So as you can see, right now we're on the daily time frame where I'll be looking for an impulse followed by a correction. Right here, we see an impulse to the upside, followed by a correction. This impulse has broken the previous structure. It is important for the new impulse to break the previous structure and close above it. I use the wicks of the previous structure to identify my highs and my lows of the previous structure. Right here, you can see this was the previous high of the previous structure. So this new impulse broke and closed above this previous high, creating a new structure. So we have the impulse to the upside followed by a correction. One rule is that the impulse should all be the same color and the correction should also be the same color. So if we had an impulse to the up, it should all be green candles, followed by a correction, which should all be red candles. New impulse should all be green candles, and the correction should all be red candles. Same if we had price to the downside. The impulse to the down should be all red candles, the correction should be all green candles, new impulse all red candles, correction all green candles. So right here, we have perfect example. We have an impulse to the upside, breaking previous structure and closing above previous structure. The impulse is all green candles, followed by a correction of all red candles. So after I identify my impulse and correction on the daily, I go down to the weekly time frame. Let's delete this. On the weekly, I identify my support and resistance that could be of influence. Right here, we see price came back down to this support area and formed a bullish engulfing. As you can see, price came all the way back down to this support area, followed by a bullish engulfing. This bullish engulfing engulfed all these previous candles. The daily is bullish with an impulse and correction, and the weekly is also bullish after this downtrend because it formed this bullish engulfing that broke these previous structures right here and closed above it also. So as we can see on the weekly, after the impulse of the bullish engulfing, we are having a pullback to the previous structure. So the pullback on the daily that we see right here is to the pullback is to the structure on the weekly that was created and broken by the bullish engulfing. So after I identify my impulse on the daily, followed by a correction, and they are all the same color, the impulse and the correction is also the same color, I go to the weekly. On the weekly, I identify the support and resistance that could be of influence. Then I go back down to the daily, and on the daily, I will draw my Fibonacci. But one thing with drawing the Fibonacci is you draw it in the opposite direction of the creation of the candles. So right here, So right here, we see the correction, the candles are forming to the downside. So we are going to draw our Fibonacci in the opposite direction of the creation of these candles. So let's draw a Fibonacci. After we draw our Fibonacci, it is always from the end of the correction to the begin of the correction. As you can see, the correction ended right here, and this was the start. So you draw it in the opposite direction from the end of the correction to the begin of the correction. Then we go down to the 4 hour. On the 4 hour, I will be looking for a break and retest of the 61 level on the Fibonacci. This is where my entry will be. So right now, we're looking for a break of the 61, a retest. That is the moment when I will enter. And my TP will be at the negative 27, and my stop loss will be at the 88 level. So right now, we're just going to play it out and wait for the break of the 61. If the price go lower than your fib, then you can just adjust it. Right now, we're still waiting on the break of the 61. Yes, you see right here, we get a clean, clear break of this 61 level. So I will be placing my buy limit order on the 61 level right here. My TP will be at negative 27, and my stop loss will be at the 88 level. You can put it just a little lower for some extra breathing room, or just put it right on the 88. So let's play it forward. Right here, you see price. Price just stepped us in right here. So right now we're in the trade, and I will move to break even once price break this 38 level and close above it. So right now it is valid for me to put my stop loss at break even and just let the trade ride all the way to my TP, and boom, price hit TP. And this was one of the trades that I took that helped me get funded. So thank y'all for watching. I will be posting more breakdown of the trades that I take in the future on the funded account as well. So we can all just become better traders. You can get an insight of how I trade. If you want to see more, subscribe, like, and I appreciate y'all for being here. Peace.